Good morning. Just a quick message for homeowners here in Israel. If you are considering selling your house, something you should bear in mind is that you will be paying a sales tax on your property. In Israel, the sales tax and the capital gains tax, however, what we call the mas shevach, are one and the same. These are not two separate taxes, but are one and the same. And the way that you calculate that is simply by taking 25% of the difference between the sale price of your home and the purchase price of your home when you originally bought it, however many years ago. Now, do not try this at home. Parenthetical note, do not try this at home. This should only be done by an expert because this calculation has to incorporate the inflation. The shekel of today is not the same as the shekel of yesterday. So please make sure that a competent person is making this calculation for you. But that's what it is. It's the difference between the sale price and the purchase price. 25% of that then goes to Uncle Sam, or if I may, Dode Shmuel. Now, if you're sitting there on the other side of this camera saying, wait a second, I bought my house in 1975 for $500,000 shekels, and now it's worth 4 million shekels, I'm going to be paying through the nose. So the good news is that this calculation only begins from January 2014. Any value of your house before that is not incorporated into this calculation. So that is something very beneficial for home sellers. An additional thing to know is that you can partially write off, emphasis on the partial, any expenses that went into the purchase of your home. That is including the purchase tax that you paid, the fee that you paid the real estate agent when you bought your home, lawyer's fee, and even interest rates on the mortgage that you paid towards your house. These are all expenses that you get a partial write-off for in the calculation of the mas shevach, of the capital gains tax or the sales tax of your home today. But the big winner for home sellers is if the house that you are selling is your only property owned in Israel, then you are patur, you are exempt from paying the sales tax. So if this is your house, condition is that you own the house for at least 18 months. Okay, so if this is your only house and you've owned it for at least 18 months, you do not have to pay a sales tax, the mas shevach, on your home. If you are selling your only property within 18 months, before the 18-month period has arrived, or you own more than one property here, then you would therefore be paying a mas shevach. Now you get a complete patur if your house is worth up to 4.5 million shekels. It's around 4.5 million shekels. Anything above 4.5 million shekels, you would have to pay on that amount that is above the 4.5 million shekel mark. You would have to pay a mas shevach on that. But that is tremendously good news for home sellers and something to bear in mind if you are considering selling your house. Just to lay out the terrain a little bit, give you a heads up of one of the expenses that will lie ahead of you. I do plan on giving more videos on the costs of selling a house, things that you need to know about, and I look forward to you staying tuned. It's been a pleasure. I do appreciate your feedback. I love the messages that I get from this. I look forward to hearing from you. If you have any questions, please comment, message, whatever it be. It's been real. Have a wonderful day.